You're very, very optimistic, it has to be said, when it comes to Bitcoin. People talk about the UAE as the Wall Street of crypto, but you go further. You've saying that Abu Dhabi is going to be the global hub. So just talk to us about how close we actually are to that.
Well, first of all, I think this was a very good year for the crypto, Bitcoin, blockchain narrative in general. What we're seeing right now is actually capital markets copying the crypto markets with a very strong sentiment across tokenization, across a lot of people recently. I've just been to the Abu Dhabi Finance Week. People are talking about the tokenization of real estate, of private markets, of public markets. We've seen this year capital markets copying crypto markets, moving 24/5 and now moving 24/7. Abu Dhabi, the capital of capital, has always said that they wanted to take a significant part in that transition into the digital asset economy and the digital space, which we're definitely seeing scaling up across the world with more than 400 people now with digital assets. And now we're seeing also the US saying that they want to lead in crypto, that they want to see US capital markets moving on chain. So we're seeing a lot of trends right now happening from capital markets into crypto markets.
Well, hold on a minute, Yoni, because you've got Bitcoin heading for its worst quarter since 2022. It's set to end the year lower, as I say, despite the general risk attitude in stocks and the demand for havens like gold. I'm interested why you see it as the digital gold in that case.
Well, I've been in crypto since 2011. Luckily at eToro, we caught it very early on the intersection of finance and technology. So we actually looked at Bitcoin back at $5 per Bitcoin in 2011. Then we saw it rise to $1,200 and listed it on eToro back in 2013, just moments before it crushed back in, I'd say, the first crypto enter in 2014. So we've seen several cycles into the crypto markets, into Bitcoin price. I would generally say in capital markets, when everybody's expecting something, you know, an asset to move in a certain direction, in many cases, sometimes it might surprise. So I think a lot of people are surprised while this the friendliest administration in the US to crypto, a lot of developments in the technology part of the crypto space and Bitcoin space with recent even tokenization on Bitcoin, to see price actually slide this year on Bitcoin and generally in crypto markets. People are talking about the cycles, of course, of the crypto markets. But my view on capital markets and Bitcoin markets is always a long-term view. I've no doubt that this is a correction eventually into higher prices in Bitcoin and into the transition of more than $100 trillion becoming digital assets over the next 20 years.
Okay, so a long-term view. You had Eric Trump telling Bitcoin Miner 2024 that you're going to see Bitcoin hitting $1 million. How long-term is that view? Is that sort of talk helping the market, or is it just fantasy?
I think it's helping the market. I don't think it's fantasy. I think if you look today at, you know, and it's a great time to look at the market cap of gold and silver right now, hitting all-time high. You know, I remember my grandfather talking to me about buying gold in the 70s for $50. It's coming up to $5,000, I think, you know, with $4,400 right now. So that's 100 times on gold since the 70s. So I think deflationary assets like Bitcoin, like gold, are actually positioned to grow over time, basically reversing, you know, or reversing the correlation to inflation, which has been growing in recent years, especially in COVID. So I do think Bitcoin represents digital gold. We need to remember gold has been with us for 5,000 years, powering a lot of the global commerce. Bitcoin is with us only about 15, 16 years, powering the digital economy of a new generation of Gen Y, and even more than that, Gen Zers and Gen Alpha, who are more crypto native. And I think people are looking at Bitcoin as their digital gold, but that's younger generations who are going to amass over $100 trillion in the next 20 years. But right now, the vast majority of assets in the world are still held with central banks, financial institutions and people over their 70s.